Hi, everyone, and welcome to the second episode of Hub Talks, a space for us to discuss initiatives coming out of the recently launched Innovation Hub and emerging topics in the fintech community. My name is Arif Ismail, and I'm the chairperson of the Intergovernmental Fintech Working Group, as you now know, also known as the IFWG. And I'm also the host of the Hub Talk series. The South African financial sector regulators established the IFWG in 2016 already to understand the growing role of fintechs and innovation in the South African financial sector, and of course, to explore how regulators can more proactively assess emerging risks and opportunities in the market. Recently, the IFWG launched an innovation hub with the aim of demystifying the regulatory landscape, providing a safe space for experimentation and actively advancing innovation. In today's session, I am absolutely delighted and have the privilege and pleasure of chatting with Dino Lazaridis. He's being one of the founding members of the IFWG and, of course, now a fintech specialist from the FSCA regarding the recently published Fintech Scoping Report in South Africa. Hi, Dino. How are you today?
Hi, Arif. I'm really well, thank you, and yourself? I'm excited to be here.
Excellent. Same here, Dino. Let's get straight into it, Dino. Often when people talk about fintech, they have different definitions of it. So before we get into anything, do you want to give us your understanding of what you're referring to when you talk about fintech in this report?
Sure. So we refer to it as tech-enabled financial innovation that can lead to new business models, applications, processes, and products.
Excellent. So there's some focus on this emerging technological innovation, but of course you're looking for new products, new services, and new business models. Thanks, Dino. So can you give us then an overview of what you set out to do with this report? What was the aim?
Sure. So the objective was to help policymakers and regulators better understand the fintech ecosystem. It was a bit of a void in the market because it wasn't a coherent report or aggregation of data for the fintechs in the country.
Fantastic. So you were trying to get a handle on what's happening in the landscape, how many fintech firms there were, etc. In the report, Dino, it states that fintech is transforming the financial services sector, not just in South Africa, but across the globe. With this comes, of course, a host of benefits and, of course, risks, right? What do you think this means in a South African context?
Sure. So in a South African context, the benefits can be solving payment or credit or remittance problems, but it can also be accessible and appropriate investment, savings, and insurance products at scale. With respect to risks as well, because there's always risk sides, there are some regulatory arbitrage questions which arise, ambiguity of existing financial safety nets, or are they adequate, and potential threats to the financial integrity.
And Dino, if I delve just a bit deeper into the benefits, is there an expectation that you would see, apart from new products and services, would there be an impact on, for example, cost or convenience, etc.?
Sure. So with the efficiency gains, there's a dramatic decrease in cost, especially the marginal cost per product. And often this is passed on to the consumer, where they actually save a lot compared to the legacy products. A lot of the fintechs have got quite new systems set up, which are a bit different to the incumbents who have old systems in place. So there's a significant cost saving that can be pushed onto the consumer, as well as more personalized and tailored products, as opposed to just a catalog of products, which often is seen in the market.
Excellent. So a tailored set of products rather than just, as you describe it, a catalog of options. Fantastic. So a natural question then to ask is, how would you rate South Africa's fintech scene in a global context?
Sure, Arif. So I think, and yeah, we are a bit biased, but I like to think that we are extremely competitive. So we have about 220 fintechs operating from last year. If we have a look at the figures today, I'm sure it's a bit higher. But if we compare ourselves to Israel, which has got about 400 fintech startups, we actually compare very favorably. So Israel has got a very vibrant fintech market with significant investments and capital. But SA companies and SA fintechs have offered very innovative solutions that compare very favorably on the international markets. They've solved pretty challenging problems and brought down the costs and achieved great deals in the recent years.
Excellent. I'm glad to hear, Dino, that we compare fairly well. Let me dive a bit into how the report came about. What is the process that was taken to capture the data in this report?
Sure. So it was a very laborious and time-consuming, but it was first to define the market and the segmentation, followed by a market scanning, and this was done mainly through interviews and a desktop research that was pretty extensive. A lot of calls, a lot of interviews, and aggregation of the data.
Excellent. So it wasn't just, as you describe it, wasn't just desktop research. It was also interviews that were held with specific fintech firms. So there's some rich data that came through. A natural question to ask then is, and you've probably covered some part of this, is how many active fintechs did you identify? I think
Sure.
You mentioned the number before. Maybe you can confirm it. And then the question is, were you surprised by this result?
Sure. So there were just over 220 active fintechs, but we weren't surprised because we knew that we had a vibrant fintech system and ecosystem. The most dominant segment was payments at 67 firms, and this is actually in line with international trends because payments being the basic and first financial need of all consumers. Still pretty small if you compare it to the established large incumbents. Payments in the fintech space only make up about 3% of total transactions and about 6% of volumes, followed secondly by business-to-business tech solutions. And this is a direct link to innovation. So these fintechs or this segment offers business-to-business support for companies which offer financial products who are customer-facing.
Wow, that's quite interesting, Dino. So payments is still the name of the game, and fintechs are targeting that particular segment. And then you're describing an interesting segment called business to business that's been identified. Fintechs providing services to other fintechs. Very interesting.
Mm-hmm.
Dino, I have to dig deeper then. What were the market segments that were identified in the report, and did these segments align to international trends?
Sure. So the segments were payments, capital raising, crowdfunding, businesses like we spoke about, insurtech, as well as other forms of capital raising. But if you have a look at the trends, like the trends do align to international best practice. Often fintechs, they start off in spending money, so they offer at financial services, followed by sending money, as well as lending money. So it's spend, send, and lend. And then from there, they often divert into savings and investments and insurance. So it was very interesting range of eclectic companies that were surveyed, and it's in line with what we see internationally as well.
Dino, a naughty question that I could ask is, what market segment would you consider, in your view, the biggest threat to incumbents in coming years?
Arif, I think that would have to be payments. So payments, again, being the biggest financial need, and I think the biggest one with the potential for disruptor to shake up, especially through the efficiency gains and through possibly even remittance. And the proposal of possibly expanding payments to non-banks into the future. So certainly payments.
Yeah. I'm going to put you on the spot, Dino, and
Sure.
You often describe a trend that you see, starting with payments and moving on, and you've got a catchy tagline for it. Can you take us through your thinking in terms of how you see fintech activity starting with payments and then migrating to other offerings?
Sure. So it comes down with send, spend, and lend. So it's sending money, and then spending money, and then lending money. So they sort of send and spend because they build a customer profile on their habits, and they build data and credit scoring, and that obviously influences the lending part because they build these very tailored risk models per consumer. But it comes down to data and the aggregation of data. Certain fintechs even take tax returns and they build a credit profile around that. So it's the payment data which is used to build the credit profile, which is used to create the lending profile. Because if you look at the payments, it isn't as profitable as the lending. Lending is by far the most profitable segment or market in the segment.
Excellent. Thanks, Dino. If I dig a bit deeper, then you pointed out that there were conversations that we actually had, interviews that we had with these fintech firms. Can you talk us through some of the most significant factors that have been identified that contribute to or detract from fintech growth in South Africa?
Sure. So we're fortunate to have the time and the capacity to interview these entrepreneurs. And the dominant message that came across, and it's been addressed in the Innovation Hub that we can speak about a bit later, but it was regulatory engagement was seen as a stumbling block, challenges in reaching sufficient scale, limited interaction with industry peers, as well as insufficient funding options for startups. The startups strongly viewed that the venture capitalists as well as the private equity guys in the country were very conservative if you compare it to international norms, and often only betted a sure winning horse as opposed to taking a chance on seed capital or early stage funding. We have also, we've also spoken a bit about the Innovation Hub quite often, and these concerns, quite a bit of them were actually addressed through the Innovation Hub through a single point of entry for the fintechs to speak to the 6 financial sector regulators as well as interaction between industry peers as well.
So that engagement, I mean, apart from the other issues that they've raised, like, access to capital, etc., but the engagement with the regulators are quite important in your view. Access to the regulators.
No, definitely. Yeah, certainly as well. And it's also a lot more efficient through the Innovation Hub, as opposed to going to various regulators to try to find out where they fit in or finding they can just access the Innovation Hub and reach all of the other regulators. So it's a lot more efficient that way. They also pointed to certainty as well, and the Innovation Hub speaks about that. It sets a tone that South Africa and the regulators are pro-innovation, as well as also protecting the consumer. And that also helps attracting funding. Yeah.
Excellent. Dino, the report highlights the need then for regulators to create, as you described now, an environment that enables the fintech industry, right? The IFWG and the recently launched Innovation Hub are obviously, as I hear you, committed to creating such an environment. In your mind, what should we be focused on?
So we have focused on, and I think it's important, as promoted innovation, but responsible innovation. And this can take various forms. It's not one single financial activity. The one that comes to mind again is payments, but I think just the promotion of innovation, which is responsible, is the correct approach.
Excellent. So, interestingly then, your mindset says that as people engage with us in the guidance unit or the sandbox, etc., and even when we're doing policy work in the accelerator, that our focus should be on responsible innovation. I have to then maybe follow it up. Often then when we talk about these fintech firms playing in the innovation domain, people are very interested in understanding what's their relationship with the traditional banks. Is it competitive? Is it collaborative, etc.? How do you see this playing out, Dino?
So I think if you have a look at the early incumbents, especially after the financial crisis, every fintech wanted to be the next big bank or big insurer, and there were actually challenges, and I like to refer to as fintech 1.0. If you have a look at the new approach, fintech 2.0, it's a lot more of a collaborative approach as opposed to a approach where there's partnerships being established, there's sharing of value, and there's also sharing of risk. So I think that's a lot more sustainable and it's more welcomed, and it's a bit easier to rescale for the fintechs and less risky for the big incumbents to try things a bit against the grain. So I think that's a common trend which has been distilled in South Africa, and again internationally, it seems like it's the way forward which the market is progressing.
Yeah. So I'm hearing that there'd be these partnerships that are created between the fintech firms and the traditional players like banks and insurance companies, etc. The big question that kind of comes to my mind is that this is a really fantastic report. We did not fully understand the landscape before. It's like almost flying a plane but not having dials. Now we've got some dials, and as you point out, payments is the hot segment, followed by B2B and lending and so on. The question that I have in my mind, is what's next for the Fintech Scoping Initiative?
So the Scoping Initiative only had a look at fintechs established from 2008 onwards. So that was when we put the peg in the ground and we couldn't boil the ocean and have a look at all fintechs. And we had a look at particular segments, but we didn't have a look at the incumbents and the established players who have been around for a bit longer. And the plan is to have an online portal that speaks about the data and is a lot more dynamic and updated by incumbents as well as various stakeholders and role players. So currently, yes, it's only a PDF, but we plan for the report to be a lot more dynamic and useful, because over time that report is going to date. So that's the plan, is to have an online portal which is accessible to the regulators, various stakeholders, incumbents, investors, and the like.
Excellent. Dino, I think that would be so fantastic to see, almost fintechs at your fingertips. You can hit the online portal and have a look at the mapping. I'm guessing that at some stage, if I have to dream forward, you could almost see a map of South Africa and where the different fintech players are, maybe in different colors as we explore the different segments, etc. Would that be dreaming too far ahead, or is that on the cards as well?
It's actually on the cards, Arif, and that's exactly what we're planning on doing. So part of the report puts each fintech into a particular segment, like we spoke about: insurance, payments, investments, lending. But we also have a map that we've created on where they're located. Is it only in regions? Is it throughout the country? And that's a plan, is to have a single dashboard as you enter this portal, and it has a lot of dense information on the back end, but very easy to understand on the front end, like how big the segment is, where they're located, how many fintechs there are. So that's exactly that, and it isn't too far forward looking.
Excellent. And Dino, if I ask it maybe from two perspectives, from the perspective of the fintech, why would I want to be on this portal?
Well, I think it's better to have a seat at the table, and I think it's better to have an open dialogue with the regulators and be visible to consumers, because there could be value in the future. It could be certain information that you want consumers to know about you, as well as open yourself up to other businesses and other business opportunities. So it's better to be included than excluded, but the thinking is that it would be your prerogative if you decide to be included or not. So yeah, I think there's more value to be at the table than not, certainly.
Excellent. I think you've answered my second question as well. The second question was going to be, from a consumer perspective, what would that benefit be?
Sure. So if the portal goes down the route of certain information which is very relevant for a consumer, possibly which firms have got certain accreditations or regulations, as a consumer, I would like to know that. And I would certainly be more inclined to participate or to use a particular fintech services if they have got certain things in which are required by law, as opposed to unregulated business, which can go down another path which isn't on the cards for today.
Excellent. Dino, I think you've given us a fantastic overview of the Fintech Scoping Report, what segments it covers, some future work that's going to be coming out. We look forward to that. I have to ask you a catch-all question. Is there anything else you would like to talk about, Dino?
I certainly encourage all fintechs to access the portal once it goes live to make sure that what we thought that your business is categorized as is the correct category, as well as incumbents who it's a missing portion in the database, to make sure that they're included. Again, it's better to be, I think, in the portal than out the portal. So open up the invitation to all fintechs to please participate and to please go on and to be included.
Yeah, thank you so much, Dino, for your time today. I think the message that I kind of take out in your last set of thoughts here is you got to be in it to win it. So I think this was a really interesting and insightful conversation. Many kind thanks for your time, Dino.
Appreciate it. Thank you very much.
Okay, guys, that was Dino Lazaridis. That's it for today's episode of Hub Talks. If you would like to find out more about the IFWG or read the Fintech Scoping Report, please visit www.ifwg.co.za. Stay tuned for more content from Hub Talks in the coming weeks. Goodbye and stay safe.